Right, traders. This is Blake Morrow. You were listening to the Morning Edge webinar, and I want to welcome you all back. So what we're going to do is we're going to get our bias chart. We go ahead and grab that really quick, and let's see here. Let's start with the euro. And like I said, we don't have any news coming out today, but we still have to obviously get ready for today and you know, get to where, you know, get all of our key levels out there. So you know, I'm trying to imagine what's going to happen with the euro dollar and what's going to happen with the dollar following the Fed meeting. I'm assuming the Fed's going to raise rates. I mean, you know, there's a 85% chance probability that the Fed's going to raise rates, and they've kind of put themselves in a corner. I mean, that's really what it boils down to. And you know, I don't think all the economic data is out that really, you know, should signal that the Fed should raise rates. But I think they put themselves in a corner with their verbiage from earlier this year. And so what's going to happen is the Fed's going to raise rates, and you know, the risk is, are they going to have to lower them again sometime in the future? And they may have to. They may have to pull a Jean-Claude Trichet, I'm sure, is a risk. Excuse me, I didn't want to yawn on you, but like I said, I think they put themselves in that situation, you know, this time. Now, again, what I'm trying to figure out is what is going to be the trajectory following, you know, the Fed meeting, and one of the things that I think could happen is the dollar could weaken as the Fed meets, and we could rally towards 111. You know, and eventually turn, and you know, if you look at the downsloping trend line that we have here in the euro dollar, the downsloping trend line comes in at 111 and change, 111.70, 111.50 by the time we get there. I'm going to tell you right now, if we get there, that's where I'm looking to sell the euro, especially if it happens following the Fed meeting. So in other words, if we get, you know, unless the Fed doesn't raise rates, obviously if the Fed doesn't raise rates, then the euro is going to see 115 in a couple of days, probably by the end of the week. But if the Fed raises rates and the dollar weakens, I'm hoping it weakens right into 111 and change, because I want to be a seller up there. No, but I think a lot of people are also expecting dollar weakness as soon as the Fed raises rates. So, you know, when everybody's expecting that, are we going to get it? That's where, you know, I think the risk comes in, you know, that everybody's expecting dollar weakness as the Fed raises rates. Finally, they did it. Okay, they're raising rates. You know, historically, when they raise rates, the dollar will go down. But that, again, I don't think pertains to right now. But anyway, that is, you know, this situation I'm thinking. Now, like I said earlier last week, what I was looking to do is establish a dollar long position ahead of the FOMC. Well, I mean, you know, I was short the euro dollar basically at 110 from last week. Okay, and when we were at 110 from last week, when we were at 109.50, I'm like, well, you know, this is seems like a pretty good price to take some profits. So I took some profits. Will I still establish a dollar long position ahead of the FOMC? The only one I have right now is the dollar Swiss. That's the only position I have long right now, and that's the one I think I'm just going to sit in that again. All right, but let me give you the buts. In the event that we rally to 111 ahead of the FOMC, that would entice me to establishing a long dollar position. I just don't think that's going to happen. What I think is going to happen, I may be completely off base, but what I think is going to happen the next couple of days is this. But the problem that I see here is if this consolidation is what's happening, we're already tightening up way ahead of time, way ahead of schedule. Whoops, I didn't mean to do that. We're tightening up way ahead of schedule, meaning that I would expect this type of price action tomorrow afternoon, not necessarily right now. So, but anyway, I think any rally up towards 110 and a quarter for today is going to find sellers. Okay, 110 and a quarter, and then obviously 109.50 is support. I know it's a tight it's a tight range, but it is what it is. Okay, so just kind of sell it as it gets up here into the above 110 and down at 109.50. I really think that we are developing this range ahead of the FOMC, but it might actually end up being more like a channel. Okay, something that looks like that. Okay, all right, let's go take a look at the cable. So the cable, I shorted the euro over the weekend. I had a short cable over the weekend, and I got out of the pound short like right around here before it broke down, before it hit new lows. So of course, when I get out of it, I'm like, oh, I get out of it and it hits new lows. It's all right, I was in the euro pound anyway. But if you don't know why I was shorting the pound dollar last week on Friday, this is the reason why. We were up at 152 and a quarter, right up against resistance in this ascending wedge. You guys remember we've had this drawn out, right? So this trend line obviously is sticking pretty well. So yeah, I've already taken profits though, so I'm already out. I'm out of the pound US dollar short. Now, I do have pound yen short, so that's fine, and I'm up 160 pips, so I can't really complain about that at all. But we got support right here, coming in at 151.10 still. And then resistance is at 152.25 still. I got to see how high we went last night, but 52.29, so yeah, 52.25. We can write 52.30, but that's going to be key resistance, by the way. And we are in a range environment. Stand by, please. Okay. Let's take a look at the Swissy. So the Swissy, if you don't know where the Swissy's at, it's sitting on the 618 retracement. Okay. The 618. Now that held on Friday. So we wrote down 98 cents on Friday. We hit 98.03. Today we hit 98.02. Okay, that is the 618. Very, very strong support. Listen, if you want to be long some dollar Swiss, get long some here. Put your stops below like 97.90 or something. That I think is going to be some really, really important support. 98.00. Very important support for the Swissy. The problem with the Swissy though is it hasn't shown much of a bounce. Obviously you can go from what had happened on Friday. You remember we had this drawn out. It just didn't transfer over correctly. Here. We had this drawn out like this from Friday. I had to delete it, but that one line, but we had it drawn like that, right? That happened, boom, boom, but the bounce was very meager. I mean, we just bounced to 98.70 and then came back under pressure again. So let's get rid of that. This looks pretty important here. Right, you take the top of this trend line here, top of that price action right there, and you go like this. So what that suggests right now is as long as we're below 98.70, it's going to have a tough time. If it breaks above 98.70 though, we're going to see a little squeeze. All right. Looks like crude's trying to stabilize here. Also, the dollar Canadian looked like it was a false breakout above the highs. We're going to go on that in just a second. Let's go over to the dollar yen. So here's the dollar yen, which I don't have any short dollar yen exposure, but you'll notice we are stalling. Now this here, let's go out to the daily chart. This is huge support here. Huge, huge support. Let me delete all this stuff really quick. Let's delete this flag pattern. Let me get rid of this really quick. Okay, this is huge, and it's so big that this is such big support that I'm actually going to put an alert. If it is less than that segment, all right. So I put an alert there, but if we break through 120 yen, it's going to be ugly. 120, maybe 120 and 120.20. Oh yeah, 120.20. Look at that. That's a 618. That's major, major support. If you guys want to get long the dollar yen, if you can get close to that 120.20 level, maybe even 20 or 30 pips above it, that's huge support. Huge support. We break through that. If we break through that, I would assume that the stock market is really coming under pressure, right? Like if we broke through here, it's not only a 618 trendline support. You could look at it as, you know, still developing the big head and shoulder pattern, but below 120, that would be ugly, extremely ugly. Should that happen? 120.20, big support layer. Okay, so where's resistance today? Well, I just have to write down the overnight highs, right? I mean, that resistance comes in at 121.35. 121.35. We are still in a range. Dollar Canadian. So the dollar Canadian, although still bullish, I'm a little worried about it right now because everybody, you know, Zero Hedge was just posting some, oh, you know, crude must be going to $33 Canadian, hit 7-year highs. Yeah, it hit 7-year highs, but also keep in mind that we closed here at those highs on Friday. We gapped down, moved lower, and then just stabbed above those highs with a little false breakout. Okay, now, and that's with crude surging the lows. So of course the dollar Canadian is going to come back and fill the gap, but look, I'm not completely sold that I showed you the chart in crude. I'm not completely sold that the crude oil is going to $32 right now. I think it's got the crap kicked out of it, and I think it's probably going to stabilize, you know, ahead of the FOMC. Now, post FOMC, could crude oil drop to, you know, to 32, $30? Sure it could. Absolutely. But ahead of the FOMC, the Monday before, probably 2 days before what could be the most historic, one of the most historic Fed days in a decade, and you think crude's going to continue to slide going into that meeting? You know, that's a hard sell for me. I really don't see it. So, you know, the dollar Canadian, yeah, we spiked into new highs here. I think that was a false breakout, frankly. I wouldn't be surprised to see the dollar Canadian back at 136.50 and just bouncing around here for the next couple of days. All right. Now, is there anything technically, though, that suggests that that should be happening? No, because actually the 161% extension comes in at 138.36. But, you know, we're obviously getting really overbought. Okay. You know, I think you just it really all hinders on crude at this stage, and I think shorting the Canadian is you know, it's obviously been a fool's game if you're out there shorting the Canadian, because it's just blasted higher every time. But what I would be looking for is I'd be looking to buy it on dips if you can get a dip. Okay, Like we've been looking for dips down to like 134.50, ain't happening. Now you'd probably look for dips down to 136, 136.20. It may not never get down there, but I would say that if we get down there, you got to imagine that is a good buying opportunity. If we get down to 136.20, you have to imagine there's a lot of shorts trying to get out too. Anybody who's short the dollar Canadian, who's been fading the strength, that they're in rough shape. They are, and they're just trying to get out of some of these shorts as well. So that's why these dips are so shallow, because they just keep buying it up as they dip down there. So anyway, I'm going to mark up today's highs as resistance, and the reason why I'm going to say that is it feels very, very much like a false breakout. Today's high is 137.81. Okay. So 37.80, and then beyond that is 138.35. 0.3835. Okay. We are in a very bullish trend, obviously. Support 136.20. If you get a dip down to 136.20, you'd probably, on a day like today, you probably want to, buy with both hands if you get something like that. I doubt it's going to happen, but I mean, every dip has been so shallow, it's just not giving us any opportunities to be on the long side either. All right, let's go over to the Kiwi. Right, the Kiwi. So Kiwi's been pretty strong today. It's been resilient. I actually started selling some Kiwi today. I bought the Euro New Zealand and I bought the Pound New Zealand. Near current levels, not too far off of where we're currently at. Now, here's the thing about the Kiwi. Its range is tightening. Its range is tightening between these highs, which are obviously very significant. You can see how significant they are right now. 67.80. I'd say 67.85. Huge resistance now. And this upsloping trend line that comes in at now, by the time we get down here, is 66.50. Okay. So 66.50 should we get down there. We're in a longer term range. You can see we're in a really, really tight range. We had that inverted head and shoulder completion that's really just kind of stopped us ever since. This is also a 786 retracement. If you guys forgot that we had this fib up here a while back, you see that's a 786 retracement, and that's capping us. All right, but like I said, this range is starting to tighten pretty good. Okay, let's go over to the Aussie. All right, so here's the Aussie. Aussie is just trading so heavy. Even following the employment figure week, it's like I can't figure out why the Aussie is so heavy. I mean, I know, like, you got crude oil that's weak, you got gold that's weak, silver is breaking lower, copper that's still struggling. I mean, this I think we can delete right now because we're not following it. Let's go from low here to high. Okay, so that's 618. See that spike low? That is obviously very critical. Okay. Very critical support right there. So critical that I think we'll of the US dollar breakdown. Oh, that's loud. Okay, so there's the Aussie dollar, and that comes in at 71.55. Huge support. Resistance. Go from this high. 38% retracement. It's already capping prices. 618's right up here. Got that low, that high, close to 618. Good. I mean, I can write 72 and a quarter, but we're pretty damn close to it. I'm going to write down 72.65 just because that's the 618.7265, and we are in a range. All right, guys and gals. I'm going to go grab some coffee really quick, and we'll just keep it at that. And when I get back, we'll do the dollar index, peso, and the Nordic currencies. And don't go anywhere. I'll be back in just a few minutes. Thanks. All right, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. Man, this cable's heavy. Wow. I mean, the pound's sitting at its lows basically on the day. Man, I mean, just getting walloped. Let's take a look at the. We have to go over to the dollar index. Hold on, let me pull that up for you really quick. Surprised I didn't have it here, but let me get it for you. New lows cable. Wow. All right. Here, let me pull up the. Okay, so here's the dollar index, and let's go over to DXY. Okay, so let's zoom in a little bit on the dollar index, and here we got the. We were monitoring this trend line here, but because we went in a Friday, I mean everything flattens out. So these trend lines, you can't say, oh, well, we broke or didn't break. It's kind of irrelevant at this point because it was a Friday. But I do think this is a decent consolidation here. All right, and this was, if I'm not mistaken, this is the 50% retracement. Let's zoom back in, or zoom back out. I'm sorry. That is a 50% retracement. That comes in at 97.15. That's going to be really important support, and I think that if we get above 98.05, then that's going to start to squeeze in the dollar, right? So let's write that down: 98.05 and 97.15. Okay, 97.15 and 98.05, right? Or 98, yeah, 98.05, that's good. And we're in a range. Okay, let's go take a look at the peso. Here's the peso. So the peso hit another new high. Relative strength is diverging pretty good, but we see the possible butterfly pattern retracement leading us to 1760. Now, you notice we're in breakout territory. If crude starts to stabilize here, this peso could very easily, stall here as well. 1760 may be the place, okay, for the peso. I think this 127% extension should cap. But what you got to look for is if crude starts to bounce and it has any type of material effect on the peso, all right? Because what I would be looking for is this breakout point. That's actually this one right here. At 1734. We're at 1740 right now. And actually, you know what? This is 1732, if I'm not mistaken. 1730. Okay, 1730, 1734. I'd say as long as we stay above 1730, it's bullish. Okay, but if we drop back below 1730, you got to be a little careful with it. And 1761. Okay, so that's 127 for 1761. Like I said, if you start to see crude oil bounce, I would monitor the peso, because the peso may start to strengthen as a result. Okay. Let's go to the Norwegian krona. Obviously, that one's in everybody's crosshairs right now because, see, what's interesting about like the Norwegian krona, how come we're not hitting highs here? How come we're not hitting highs? How come the, it's like, okay, we're not hitting new highs here. We're not hitting new highs in the Canadian, or maybe brief new highs. So, but unfortunately, the Norwegian krona doesn't look tradable at the moment. I look at that chart and I don't see anything other than we're stalling at 127% extension and 127% extension. Other than that, I can't look at that chart and go, oh, well, this looks like a good, it looks like a good short right here, or it looks like a good long right. There's like no chart set up here. But this is another one. If crude starts to bounce, the Norwegian krona could start to bounce too, alongside the Canadian. Let's go to the Swedish krona. Hold on really fast. I know you're looking at some sort of inverted head and shoulder pattern, but not while you're at the top of a range. But that's going to be good support there. 840, and resistance is at 860. It's inside the range, but you want to be long here, short there. Okay. See, this is like decisively turning from those levels. So 860, 840, 8.400, 8.6000, and this range. Okay, your bias chart is done, folks. And let's go ahead and take your questions. So